All right, so this week I'm gonna give the people what they wanna hear, and I'm gonna talk about the difference between a cash out refinance versus a home equity line of credit and break it down as quick and simple as possible. So a cash out refinance, depending on the loan program, typically you're gonna go up to an 80% loan to value on a primary residence, which means take whatever you owe, okay? Take what you think your home is worth, times that by 80%, and subtract that number out from it. So if your home is worth $100,000, I know that's a low number, right? The max loan to value is $80,000, you owe 60, you can cash out the difference minus closing costs. Now, when you do a cash out refinance, typically you're gonna have a fixed rate mortgage, you're gonna have one payment, you're gonna know exactly what that is, and it's gonna be based on the balance of the new mortgage based on your cash out amount. So let's transition over to a HELOC, or a home equity line of credit. A home equity line of credit in the simplest form is basically having a credit card on your home. You have access to the equity, and depending on the bank, credit union, whoever you decide to go to, they might be able to give you a home equity line of credit anywhere between 90 and I've even seen 100% the value of your home. Now, the cool thing about a HELOC is that you have access to those funds whenever you need them. If you pay them down, you'll have access to them again, and your payment fluctuates based on the balance of the HELOC. Typically, HELOCs come with higher interest rates than a fixed rate mortgage depending on where you find one, and your payment might fluctuate every single month, and then you might have the temptation of being able to cash out that money over and over again and maybe even use it for things you don't need. So the preference is certainly yours. A cash out refinance, one payment, one mortgage, it's fixed based on the balance you have. A HELOC is you're gonna maintain your mortgage payment on your regular mortgage, and you're gonna have a separate payment for a second mortgage or a home equity line of credit.